A lot of focus out there right now on lending, on consumer borrowing, to be specific here. How did it hold up over at Wells Fargo?
Yeah, well, great to see you all again. Thanks for having us. We did see in the quarter continued, progress in the recovery, and I think you saw that through the loan growth that we saw. And it was really across the board, both on the consumer side as well as the commercial side. On the consumer side, we saw growth in auto, in cards, underneath we saw some growth in our non-conforming mortgage portfolio as well. And so we finally started to see some of that growth materialize, which I think will be a good thing.
Mike, just one quick follow here on the auto loans. Can you kind of give us a little bit more perspective there? Because I did see that, if I'm reading the data correctly, that a lot of it was higher value of the loans themselves. Was the volume in loans also higher?
Yeah, we had a record origination quarter again, third quarter in a row in the auto business. Now, about 2/3 of our auto business is used cars. So we are benefiting from higher used car prices, but we're also seeing that volume be really strong there as well. The new car market's a little more constrained, but we're seeing that growth really come through in the used car volume, which is good given the mix of our business.
On one hand, you have inflation, which could impact consumer spending, and on the other hand, you have higher interest rates. And I'm wondering how much those higher interest rates could potentially stifle some of this loan growth and deter some of the consumers from taking on more loans.
Well, I think you have to first start with the fact that we're talking about raising rates means that we have a really strong, economy underneath it. And you see that, in consumer spending. You see that in sort of the equity markets. You see that in, loan growth, as we sort of talked about. And coupled with that, consumers still have a lot of liquidity. It may be off the peaks that we saw, a couple of quarters ago, but still on average, maybe 30% more in consumer deposit accounts. So that really should help, consumers continue to be out there growing the economy. Now, rates, again, will be helpful for us, and we've talked about that in terms of our net interest income. But I think it's a good sign that, the economy continues to be pretty strong underneath it, which should be good as we look through the rest of the year.
Beyond the consumer business, you did show some strides in your investment banking business. I'm really curious, Mike, about specific plans to potentially grow that business more into this year and how competitive you think you could be.
Yeah, well, look, we think we have a lot of opportunity in the investment banking business, in particular, as you sort of think about going after the opportunity to work with our middle market and commercial banking clients, where we have a really great market share. And we've talked about that opportunity for the last few quarters. So we think there's a lot of room for us to continue to grow. We're adding people both in the commercial bank in the investment bank. And that's in the context of us continuing to execute on our efficiency initiatives and agenda while we're able to get costs down. We're able to make those investments to go after that opportunity, which we think will be significant over time.